Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Morning, folks. Morning. Welcome along to Wealth Coffee Chat. Wednesday, 28th of January. I'm back. Property management's back in the house. A few things going on in my world. So we are tuning in again for a Wealth Coffee Chats team. So apologies, but we are here. Listen, team, for the regulars, welcome back. If you haven't met me before, my name is Cash Shosted, 15 years in the property management industry. It's the game I play, and certainly along the way you learn a thing or two. And what we always love to do on a Wednesday is share some stories, share some insights, certainly have some conversation and some banter. So, the more interactive you guys are in the chat, the better it helps me, and certainly will hopefully solve the world of property management together along the way, and help you keep safe and help you hold your wealth so you can move forward in your journey. So today, that's a little bit about me. Of course, the team, as I say, questions in the chat as always. But today I thought we'd kick off with something I read at the end of 2025 in relation to the rental market. I might, over the Christmas break, I'm not sure about you, but, you go to a couple of barbecues, things like that, and people go, hey, listen, what do you do? And you tell them you're in property, and they go, hey, what's the market doing? Right. And it's such a interesting conversation because there's so many variables, what we're actually talking about in the market. But for today, we're going to specifically deep dive into the rental market. And I thought I'd just give you some headlines to think about in 2026, and, just get an understanding of where the foundations are as of the 28th of January. So a couple of good resources as always. So as always, first one back on deck. I've got the tech going left, right, and center here. So click the right button. We might see it on the screen, navigating the rental market in 2026. Don't get left behind, team. I'm telling you, this year in 2026 is one you don't want to miss, because in 2023, if that was the year of the rental crisis, and 2024 and 2025 was the years of the rental squeeze, what on earth is 2026 got installed for us? Because, and I don't have the answer yet. We're going to see how it plays out, but certainly I've got an opinion on how 2026 might play out for landlords, for tenants, and certainly for property managers as well. So quick snapshot, shall we? Let's hopefully share the screen correctly. I want to give you guys a quick snapshot into what's going on in the world, because here, if I click that right button, there I am. National vacancy rates sitting here at about 1.4%, team. Slight uplift from November to December. Nothing to be concerned about. That's just seasonal, given December is obviously a time for festivities and whatnot. So slightly up, but as we say, don't let that fool you. It's just very much seasonal. There is still the underlying pressure of supply and increase in demand, and that hasn't gone anywhere. And I would dare say in 2026, that's not going anywhere else, team. So the underlying pressure is still there. Now, certainly when we look at different marketplaces, I'll just click on Melbourne here. Melbourne sits just at 2%. So as we, quick reminder for everyone, 3% vacancy rate is considered a balanced market, equal demand and supply. But for the most part, correctly saying, I'll recorrect myself there. Across the country in all the capital cities, everything is quite low when it comes to supply in the marketplace. And so, very much so the investors and landlords hold all the cards in particular. So Melbourne, 2%, cities like Brisbane, 1.2%, Sydney, which as we know is the most expensive city to rent in the country, 1.8% there. You'll start to see as January closes out, February, March, you start to get the data for early 2026. You'll see a slight drop in that statistic, I would imagine, but we'll see how that plays out. Now, there's plenty of things going on. Perth, certainly if I click on Perth here, it's still the tightest rental market in the country. You can see from COVID 2021, kind of never came back, right? There's no new supply or enough new supply in Perth to satisfy the rental demand over there. So I do feel for you if you're a renter in Perth trying to find a rental property. It must be tough work out there. And certainly, a lot of these places, or particularly Brisbane in particular, if you were to deep dive that into, from the Sunshine Coast down to the Gold Coast, you look at that sandbelt sort of triangle, if you like. A lot of this demand is being driven by lifestyle choices, the beaches, the infrastructure, the employment, all that sort of stuff. The underlying fundamentals there are still right there, which is kind of cool. So that's kind of what's happening in the marketplace. But what does this mean for you as a landlord, your property managers? What do they need to be aware of? Well, I wrote some things down, right? So interestingly enough, unit growth across most of the capital cities is actually outperforming the housing market in terms of rent growth. Why is that? Well, day in, day out, right? Us property managers, we see numerous rental applications come through on the available listings that we do have. Now I can give you a quick snapshot in Brisbane, right as of today. We're very fortunate enough. We look after around 750 properties across, Metro Brisbane down to the Gold Coast, and of those 750 properties, we actually have about 8 available. And of those 8 available, a couple are actually new build properties. So, if you consider from the existing pool of properties that our team actually looks after, and this would be very much a trend I would imagine in for other property managers out there, there's not a lot actually out there in the marketplace. Of the applications that we do see from renters, affordability comes to the forefront. So, if you've been tuning in for Wealth Coffee Chats for the last couple of years, you might hear me say, hey, when you go to select a tenant, you're looking at their affordability rate, their income profile. That 30% income to rent ratio is a general rule of thumb and a good rule of thumb to work off to assess whether that tenant is suitable and can afford to meet their expectations around rental payments. But what's happening in the marketplace is that most tenants are meeting their limits, right? And when they meet their limits, what happens? There may not be that excessive rent growth for the landlord if that is to continue, right? Now, wages may not be increasing for everyone in that respect. So again, we're seeing a limitation on that. So, what we're finding is, in Sydney right now, the average asking rent for a house in Sydney is just over $1,100 per week, right? But if the market can't afford that based on their income profiles, then it might be normal to think that that's not going to continue to grow in that respect. But what's happening in the marketplace now? 1, 2-bedroom units, 3-bedroom townhomes in particular, we're seeing some really good results when it comes to rent achieved. It was only about a couple of weeks ago over the break, 3-bedroom townhome here in Kangaroo Point. So if you know Brisbane well, Kangaroo Point, inner city suburb, great suburb, got the Gabba, its doorstep, the Brisbane River, all things going from a lifestyle and livability perspective. And, the data suggested that this townhouse would rent anywhere between kind of that $950, maybe $1,000 a week. $1,000 a week was going to be considered a very, very good result. In turn, we put the property up for $1,100 per week, and just like that, one open home, it was gone multiple applications. And that's the marketplace. What's the game we play in here in Brisbane? And I would dare say if you've got a property in Perth, Adelaide, Sydney, in some respects, different pockets of Melbourne, depending on your property type, you are going to be seeing a lot of activity and a lot of results in 2026 like that. Supply still remains the anchor. Construction bottlenecks aren't easing, right? Which we think in 2026 rents will continue to climb. I mean, we called this 3 years ago. We said, hey, listen, from 2023, I think, well, 2022 perhaps, we're talking about it. We said, hey, the next 3 to 5 years, significant rent growth. We're seeing a lot of, flight to value. I think at this point in time, if you think about it, a lot of these, I saw some statistics this morning from Cotality. They're saying 54% of first home buyers are actually shifting their behavior towards this rent investing strategy, whether you believe in that or not. But that's, I guess, some of the commentary out there. That's sort of a bit of the trend they're seeing, buying investment properties in growth areas and renting where they want to live. And now perhaps that Kangaroo Point townhome I was just talking about, perhaps those renters are in that kind of similar position, happy to pay a little bit more on their rental, and they're investing elsewhere. Because at the end of the day, team, my notes say here, when I was thinking about it this morning, vacancy rates are significantly below the 3% balanced market. So you, as the landlord, the investor, if you have got existing investments now, if you are in a position where you're about to buy your first investment home, certainly the cards are held with you. But in 2026, here's my don't get left behind catch cry, team. Like I say, 2023 was kind of that rental crisis. 24 and 25 was the squeeze, right? You're trying to squeeze all the juice out of the lemon, so to speak. But in 2026, it can't be, I don't believe it's set and forget. I don't believe you can just put your property on the market, rely on the market to do the heavy lifting, right? In 2026, I think with a limit, or that limit catching up with a lot of tenants in regards to affordability, I think there's going to be some focus and some real conversation around the property quality, type, location, that is going to be the underlying driver of rent growth. And then, of course, how you and your property manager actually manage the property and the tenancy into the future. I think, rent reviews, rent increases, market commentary, your mindset and retention strategy around your tenant, depending on their income profiles and how they're looking after, obviously, is going to be really important in 2026. Tenants, if they don't like where they are going to move, team. They're going to move, and they're likely going to pay for it too. So retention is a big key when it comes to not just rent growth, but for you as the landlord to maintain and sustain a consistent level of income into your investment property. So we've got a lot of commentary from Tim. Awesome morning to you, mate. Hope you are well. A lot of rent increases come down to affordability of local people. Even though you might have high demand, low vacancies, people are struggling to afford higher and higher rents, which comes with limiting that social demographic. Yes, I agree, Tim. I think it's really interesting, and that's why we're saying, the underlying issue of supply, the construction bottleneck, is not changing in 2026, team. We do expect rents to continue to climb. And what's interesting is that we're seeing those rent growth. I think I did see something this morning. Yeah, Melbourne. Yeah, I've got it down here actually. Melbourne and Sydney actually in 2025 saw just over a 4% rent growth statistic and piece of data there when it comes to unit rent growth. And so in Melbourne and Sydney, those units are actually outperforming the growth of houses, which makes sense when the average house in Sydney is $1,100 per week. Melbourne, on the other hand, big opportunity in 2026. It's certainly still the most affordable rental market in the country. So if you're a renter out there, you might snap up a bargain, but don't wait too long and get left behind, because I do think it's on the move, and we're starting to see that. So team, in summary, first World Coffee Chat back at it. Rapid fire bits of information from me this morning. I'm fired up. I had my coffee, and I think we're set for another big 2026 year. Market's tight, yields are under pressure. I think units, one to watch. They might be the new rent growth machine in 2026. But as I said, team, it's not about set and forget here in 2026. Make sure you're proactive with your property managers, and you have planned and you understand where you're going in 2026 with your rents. And I can only double down on this, but really understanding and working with your tenant relationship there as well, to understand their position, their income profiles, to help you make better decisions at the end of the day and keep more of a consistent cash flow coming through the door. So 2026, get ready, team. It's here. It's almost the 1st of Feb, so we're 1 month in. So don't wait, get onto it, and certainly we'll be in for a bumper 2026. But that's it for me this morning, team. Don't forget, 8:10 Queensland time. You'll see the financial planning team on tomorrow. So tune in for another episode of Wealth Coffee Chats. And thanks again for playing full out this morning. I'll see you very shortly.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.